Hi everybody and welcome to ICE Commentary. This week we'll be taking a look at the Russell 2000 and the US equity markets with a technical view on where they're likely to be trading for the week ahead. Just before we do so, just want to bring your attention to a webinar that I'm hosting this week in association with ICE. The webinar is on the critical trading errors that we see traders making and most importantly how to go about avoiding them. This session is running at 3 p.m. Eastern Time on Monday. That's 8 p.m. in London, 7 a.m. on Tuesday in Sydney, or 9 a.m. in Auckland. And I look forward to seeing you guys there. I will be presenting this session, and it will be a good one. It's the first time we've run this, so please do join us. The registration link will be in the email, whether you're looking at the email sent out by ICE or by Trade with Precision. You should see that there. Alternatively, you can just visit tradewithprecision.com, click on free live webinars, and under free live webinars you'll see it there as the first webinar on the list, the critical trading errors, running in 23 hours and 16 minutes. So hopefully we shall see some of you there, and I look forward to speaking with you then. Looking though right now at the Russell and where it is likely to trade for the week ahead, also what happened last week. So basically last week I was looking for it to break up through this high, which would just be an indication of it breaking up through ultimately this weekly candle and be a bullish sign, this bullish pattern that we look for of a bullish candle touching the moving averages and now therefore ready to push on and above. It has broken that high. It is therefore bullish in my book and it looks likely to continue. I'm looking for it to be certainly breaking up through these previous highs and just pushing on nicely and making a new high as it has every other time it's broken up to the previous high, just pushing on quite nicely from here. So it looks bullish. It looks strong, it looks likely to continue. The daily is bullish, the weekly is bullish, the monthly is bullish. I don't want to keep on sounding like a broken record in that the monthly is overextended and is due a pullback. I just want to keep on pointing out we just don't know when that will occur until we start to see signs of it. And all I can say right now is there's no signs of it happening. Doesn't mean it can't happen in the next 24 hours. It might happen, as soon as the market opens on Monday, for all I know. I don't have a crystal ball, so I can't predict when that will happen, but I can start to see the signs of it happening when it starts to occur. And right now there's no signs of pullbacks. It is just bullish and looking, for the time being, like continuing. So looking bullish across the board on the Russell, and I'm bullish this week, looking for buying opportunities on, already based on the weekly chart, very bullish, and even just coming then down to 60-minute charts, 120-minute charts, 240, 480, just looking for pullbacks on these time frames, looking for any buying opportunities that occur. And all of my trades this week, for the time being, will be to the long side unless something drastically different changed, unless these markets started to downtrend in the space of this week. But right now they are looking very bullish and likely to continue on up, and very little stopping these markets from going higher. One other thing is that they're starting to lag the other index markets. So by that I mean it's moving slower. The Dow has well and truly broken up to these previous highs and had perhaps a slightly bigger week last week. So looking really bullish, nothing in the way. Even the monthly chart here having just consolidated into the averages, now broken up through those highs, looking like pushing on, just really, really bullish there on the Dow, and very much a leader as compared to the Russell, which is a lagger. The S&P also leading, potentially even more so. It's been a number of weeks now that it's been above this previous high. 1, 2, 3, 4, 5 weeks. Last week also pushed on nicely, looking really strong. Daily, weekly, monthly chart, all an uptrend, no signs of pullback, other than, while I say these are leading, and the S&P is certainly leading, i.e. it's moved further than the Russell has. The Russell still hasn't broken its high back here, but it's also overextended, so due a pullback. Now, due a pullback just means a bit of a pullback into these daily averages before pushing on again. That may happen this week and will be of no concern to me whatsoever. Not expecting any bigger pullback at this stage, but a little pullback for a few days, 2, 3, even 4 days down, back into the averages before pushing on is completely normal. If that does happen on the Dow and the S&P, I'm not expecting as big a pullback on the Russell, simply because it also is lagging and hasn't already pushed on as far, therefore it's not due as big a pullback yet. Looking at the Nasdaq, we have just broken up through those highs too, which is just another nice little indication that the Russell will do the same thing. So just remember those highs there have been broken on the Nasdaq, and if we just come back and just look at the Russell again, you'll see we haven't broken those highs yet. So as a minimum this week, I'm expecting those highs to be broken. If we do pull back, remember that because the Russell has not moved as far away from its averages, it's unlikely to have as big a pullback. But if we did pull back, I'll be looking for opportunities. For example, as we pull back into this little bit of support that's formed down here, if it did pull back that far, it could provide some good buying opportunities. I'm not expecting any break of last week's lows, or in fact the week before last now. So this candle here, ultimately, if I just project out what I'm looking for, I am taking the width of that candle. So this is the week before last, so entry on the or either entry if it's a swing trade, i.e. broken, buying on the break of that high, or even just bullish on the break of that high, depending on trading styles. But not expecting price to break down through there, so that's when I would consider myself to be wrong on this trade. Bullish as it breaks the high, which is just done last week. If it broke down through the low, I'd consider myself to be wrong. Therefore, that's where any stop losses will be placed for swing trades. But ultimately, the way I just use this to take entry and stop loss is just to project out ultimately a one-to-one profit target. So as a minimum, I'm expecting price, and I've just done this visually, just quickly. But as a minimum, I'm expecting price to get up around that level, somewhere just ahead of the 1150 level, just looking for a one-to-one move based on last week's candle, and that's around about what I expect to happen in the next couple of weeks. Hope that helps, ladies and gents. Have a great week's trading, and hopefully I'll see you on the webinar tomorrow also. Thank you very much. Happy trading and good night.